Hello and good morning, Investing Bros. As America wakes up, we are waking up to some pretty surprising news that has come from China. The Chinese markets were halted mid-session. The stock markets were halted, and the markets are selling off. Let's go really quickly to go ahead and check out what that looks like. I've got a bunch of news to bring you all, a bunch of details, but the charts kind of tell the story here. This is February, folks. So this is where January ends. This is where February begins. And as you can see, there's been selling. So this selling is nothing new. It's down 10% just in February. And obviously, this candlestick here on the 4th yesterday closed all the way down. This was in and of itself a 6% candle. There was an attempt at a bounce higher. That attempt has failed. And this was looking to push much, much lower, but has since been halted. So that is troubling. We're going to get into why that is. But before we do, let's zoom out and show you the larger context of this. Keeping in mind that while the United States stock market indexes have been reaching all-time highs, since the beginning of 2024 here, this is where January begins, down 30%, call it, from top to wick. Right, where it rests now, down 27%. This is a stock market index of China, of the Chinese markets. Taking a look at the QQQ, which is the Nasdaq, right? Starting in 2024, right around here. Okay, 7% to the upside. Okay, so there's a stark difference here. Let's get into the details. If you're just joining us, you're tuned into the Investing Bros. I'm T. Shroom, and there's some troubling news. There's a crisis in China, it seems, and this is having a positive effect on the Bitcoin price overall. Taking a look at this over here, you can see Bitcoin, definitely some yuan swapping over into Bitcoin yesterday, pushing the price a good bit higher here. From wick to peak here, about a 3% move. So nothing to write home about just yet. And remember, it's not easy for Chinese investors to rotate into Bitcoin. In fact, if the market's halted, likely they can't sell their shares in Chinese companies to be able to rotate into Bitcoin or anything else. Even yuan, I don't think they can even rotate into yuan. But folks who were able to get out early, most certainly are probably buying dollars, probably buying euros and gold, and things that are not exposed to the U.S. markets. If we go over and we look at the Dixie is up. Yeah, there you go. That's where the Chinese economy is basically rotating into the dollar. Yeah, this isn't what we want to see as investors, but this kind of makes sense. So there you go. That's the data. It speaks for itself. Now let's go ahead and jump into the headlines here. The first one, Chinese regulators vow to stabilize market after shocks hit 5-year lows. Now, keep in mind here, everything is being translated not only into English, but also through Western media. So, I'm going to do my best to report and try to maintain a balance. But this is a Western. This is Reuters. It's not going to be overly biased, but I just want to give that disclaimer because this is a big event. It's happening all at once, and these are the moments where the media sometimes likes to steer the ship in one way or the other. China's blue chip index. We just took a look at that. Tumbled 5% last week to the lowest since early 2019. Think about where you were in 2019. Picking up your kids from school, right? Meeting with your financial advisor, headed into work. In 2019, that's what the Chinese economy just reverted back to, those levels. Amid signs of panic selling and forced liquidation of leveraged trades, 2019. The Chinese Securities Regulatory Commission, the CSRC, said in a statement on Sunday, it will step up implementing market stabilization measures. Steady expectations and confidence in, I don't even know what that word is, adamantly ward off abnormal market fluctuations. So I'm going to read it again, a little more smooth this time. Steady expectations and confidence and adamantly ward off abnormal market fluctuations. Okay, there's a lot to that. We're going to keep moving. The CSRC also vowed to crack down on misbehaviors such as market manipulation, vicious short selling, insider trading, and fraudulent issuances of shares, diluting shares. Now, two of these things, they're ascribing, look at these adjectives, right? These are trying to scale up the evilness or the badness, right, of what would otherwise be normal market occurrences. Short selling, normal, happens all the time, but they're describing it as vicious. Fraudulent issuances of shares for corporations, last time I checked, is a normal routine thing that happens, right? I think Walmart has a 3-to-1 split coming up, right? Issuances of shares, splitting of shares, consolidating of shares. It's not fraudulent. It's a real thing. Now, you could probably do it in a fraudulent way, but overall, the CSRC taking some pretty interesting language here. Of course, it's been translated. Of course, it's being picked out of probably larger documents. But let's keep moving here. The last one is probably the most damning. In addition, the CSRC will listen carefully to the voices of investors and respond to their concerns in a timely manner. Well, folks, today's theme is definitely this Chinese crisis. It's scary, but we have another story to cover. We're going to get to the interview that Jerome Powell did on 60 Minutes. If you haven't seen this, if you haven't heard of this, strap in. I'm going to play about a minute and a half of that interview, but there's a full length, I believe 13 minutes, not including the CBS commercials. Out there, I'm not going to play that for obvious reasons because it gets more into politics, but we're going to play the part that absolutely is something you should be very interested in. We're going to play it. I'm going to give my commentary. But back to China. This is worrying here, right? This is the kind of language they're placating to investors, to Chinese investors, right? What we've been told as Westerners is that China is in control of their economy, in control of their people because they're communists, right? And to a large extent, that's probably true. So why are they having to placate? Why are they having to listen carefully? You don't have to listen carefully if you're in charge, right? And they want to respond to the concerns in a timely manner, right? It seems a little bit, little soft for communist dictatorship. That's pretty interesting there. All right, next story here. The Chinese turn to U.S. embassy post into a wailing wall for stock plunge. Quite the imagery here. For those of you who don't know the wailing wall, check it out. I'm not going to try to describe that here. Ultimately, they've turned the Beijing embassy into a freedom of speech wall of graffiti, right? Voicing their claims, investors trying to, express how upset they are with this type of commentary here. Could you spare us some missiles to blow away the Shanghai Stock Exchange? That's insane. Okay, I probably shouldn't even said that. Who knows if this is going to be available for listeners throughout the rest of the day? I don't know. All right, let's keep moving here because the Cabesi letter is saying it pretty well. The Cabesi letter has organized all of the information that you need to know. I'm going to bring it to you right now. Breaking: China places new trading restrictions on domestic and foreign investors as the CSI 1000 index hits a 30% loss year to date. We showed you that on the charts there. New restrictions include. So this is the way, by the way, this is what the CSRC is saying. Listen carefully to the voices of investors and respond to their concerns in a timely manner. This is what they're actually doing, right? Some investors told that they are not allowed to sell their positions. Is this Robinhood back when the GameStop fiasco? I think it was the reverse with the GameStop fiasco, where you weren't allowed to buy new GameStop. You were allowed to sell, I believe, but not buy. Same quant funds. Some quant funds are completely banned from placing sell orders. Other quant funds banned from cutting leverage positions. Chinese markets are officially at a loss of $7 trillion in value over the last 3 years. Is China in recession is the question that the Cabesi letter is asking here, showing yet again another chart. This goes back to 2010. You can see that we have not seen these levels in the CSI since 2019. Okay? That is bad. Very bad. And this you could probably say is a head and shoulders pattern here. I don't know That it looks like a head and shoulders to me. Let me know, chat. Let me know in the chat. What do you guys think? Do you think that that is a head and shoulders? There's a little bit more commentary here from Kabesi. Even as China has vowed to stabilize its markets, investors are worried. Many believe that China will focus primarily on large cap stocks, hence why there's a huge disconnect between large and small caps now. So, very, very big. Oh, look, DeGenny from the block has already commented on this. Very cool. DeGenny from the block, a definite bro. Might even be watching yet. I haven't even checked in really on the chat. Just trying to stay focused here and deliver the best that we can. But I'll take this second to remind you all, this is for the bros, right? Smash the likes, hit the subscribe button if you're new. We're getting into it here. I see Piper in the chat saying good morning. I see Joe Nickel saying happy Monday, bros. So it's awesome to see folks in chat, trying to get educated on what the heck is going on here. Of course, in August of last year, early August, we saw this headline. China stops releasing youth unemployment data after it hit consecutive record highs. Okay? So just stop reporting on it. Kids can't get jobs, right? I'm assuming that's not coming back. I don't know if they have returned that data point for the economy as a measure of the economy, if they've returned that or if that's just gone. I'm not sure. My overall diagnosis of this situation is that we are seeing money rotate into Bitcoin here, not up a ton, but it's up 1.2%, 1.9, so about 2%, call it. And we're also seeing, but this is before the New York markets open, right? So obviously anybody could be buying Bitcoin in the world right now, but it looks like it's the Asian markets that's been pushing it higher. But obviously, dollars rotating heavily here yuan rotating heavily here into dollars, with the dollars up 0.4%, which is very significant for the dollar, right? That's a little more than just Tesla stock. A little more supply, right? The more supply there is of an asset, the harder it is to move the price, right? So ultimately, moving the dollar in any one direction with the New York Stock Exchange closed is very significant. Yuan is rotating into dollars. It's going to be interesting to see how this affects the U.S. bond market, global bond markets, because that'll be another asset that Chinese yuan will rotate into. But again, I mean, the Chinese, they have built a financial system of control. So there's a good chance that all of the money that's going to rotate out of the Chinese economy has already done so. A lot of the smart money has rotated out, a while ago. We see that illustrated here. If you just look at the index, this has been going on since summer of last year. You haven't really seen a test higher since then, right? It's just been down for about 40% since May of last year, okay? So I'm expecting stimulus from the Chinese government. I'm expecting them to say, hey, we got to stimulate the economy. We got to bail out some companies. So far, we haven't seen those headlines since Evergrande. Now, last Monday's news had a big Chinese flag on the thumbnail. It seems like it's China Mondays now here on the Investing Bros. We just can't get enough of China, it would seem. China has kind of like buying us ad spot on the Super Bowl. China has just bought the entire ad spot of Mondays now. They're going to dominate the headlines on Mondays. But ultimately, guys, I'm expecting that stimulus from the Chinese government to try to bail out their economy. That means devaluing the yuan, which means bullish for Bitcoin, bullish for the dollar too, and much to a much less extent Bitcoin, I would say. So that would probably be a wash overall. Let me know in the chat, what do you guys think about that? Maybe somebody with a little bit more Forex knowledge than me. Here we go. Let's keep moving. We've got a whole second half of the show, and it's interesting because we're hearing from both. This is fascinating. We're hearing from the two global superpowers, the top finance ministers, Jerome Powell, and what was this regulatory body called? The CSRC, which is the Chinese Securities Regulatory Commission. Okay, so I don't know what the chairman of this commission is, But we're hearing from the highest financial office regulatory commission in China coming out and saying very flowery words of comfort and concern, right? What they're saying to investors, we're listening to you. We're moving in it. We're going to remedy this in a timely manner. Steady expectations and confidence and adamantly ward off abnormal market fluctuations, right? We're going to make it okay, investors. Don't sell your Chinese stocks. We're hearing that from China, the top commission of their finance world in the biggest economy in the world, China, second only to the United States. Let's roll the clip of the United States economy leader and what he has to say.
Another economic hangover after the pandemic is a sharp increase in the national debt. 30 years from now, it is projected to be $144 trillion, or $1 million per household. How do you assess the national debt?
We mostly try very hard not to comment on fiscal policy and instruct Congress on how to do their job when actually they have oversight over us.
But is the national debt a danger to the economy, in your view?
In the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that
That sends chills down my spine to hear him say that. Now, he says this in the press conferences all the time. Well, not all the time. I think he said it. Those would be rare Jim sound bites. However, for him to say, now the real question here is who booked this interview? Was the Federal Reserve, PR division call up 60 Minutes, say, hey, we're seeing a lot of abnormalities in the market. We need to get our guy on 60 Minutes stat. Was that the call? Or was the call from CBS, hey, Federal Reserve PR department, we would really like to get a soundbite from Jerome Powell. We'd love to get an interview. How can we make that happen? I think anybody who knows about that would be sitting on quite a bit of information that I would value highly. I'm going to skip back and we'll listen to the rest of this clip.
the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability, and sooner is better than later.
So there's so much you can say about this. There's so much you can say. I do like this comment here, JT kind of saying it plainly. If it's on 60 Minutes, you're about 6 months late. Yeah. So, a lot of investors have just completely stopped caring about what the Fed has to say, right? But folks like me and Tim and the people in the chat, the good bros, if you will, we stay very, very up to date on what the Fed is doing and what they're saying. But most people don't. Most people have no idea. They might read a headline about the Fed, once a year. Even people with like millions of dollars in their 401k, they're just plugging along at their engineering or medical job, not really caring too much about the markets because it just keeps going up, right? Which is what their father and grandfather told them and what the charts tell them. So if it's on 60 Minutes, you're about 6 months late. That sounds about right, okay, from a time standpoint. But what it means to me is that the general population is now having to be educated. Now, I'm going to start commenting on the specific quotations here because he says that the fiscal sustainability needs to start being a priority, right? That's not his side of the house. He's basically saying, hey, we're doing everything we can over here at the Fed to keep things on track, to keep unemployment low, which they've done phenomenally well according to their statistics, and to keep inflation low, which got completely out of hand up to 9.1%, but has now come back down to a manageable level, right? Where continued hikes are no longer on the table, no longer necessary. I think what Jerome here is saying to the general population, remember, not to the financial class, not to Wall Street. He's saying this to people who watch 60 Minutes, who are 401k holders, retirees, people who it takes a lot for them to move their money, out of Apple, Home Depot, Walmart, right? Out of these more value companies and out of bonds, right? Out of a very conservative 60-40 portfolio. I'm not saying he's trying to get them to get out of that. I think he's just trying to issue a warning to the general population and just people outside of the financial industry who don't really pay attention to what the Fed has to say. He's trying to say, look, we have to put fiscal sustainability as a priority because it's not, right? Which is basically calling out the executive and the legislative branch saying, hey, you guys are spending like a 4-year-old with a credit card. It's insane. You got to stop. I'm doing everything I can. But if you keep spending like this, if you propose more bills to send more money abroad to fight wars, right? I'm not commenting on that. I'm just saying that's another expenditure. If you keep doing this, like A plus B equals C, this is how math works. And he's a smart guy. He understands this. It's kind of he's kind of putting his neck out here by taking this interview and saying this politically, I would say. Now we're in a very interesting year. We're in an election year, right? So is this just positioning? Is this just posturing for Joe Biden to come up and alley-oop on this with a couple of sound bites? You know, it could be. I think this is something else. I think this is transcending politics here. I usually don't say that. Things in an election year usually are all, kind of coordinated to help, one side or the other. I think this is kind of transcending. And I think it also has a lot to do with the first half of this show with China. I think Jerome Powell sees, I won't even say what Jerome Powell sees. What I see is a Federal Reserve chairman, kind of the top job for finance in the West, certainly in America, coming out and saying, hey, the rest of the government is hurting me, right? And all of my efforts to try to stabilize the economy. They've got to figure their crap out, or else this is going to get bad. America probably is fine, but right now there's a whole other country, the other superpower in the world, China, is looking like it's very unstable, and then I would say looking like it's ready to crumble, and it's looked that way for a long time. With Evergrande, last Monday, this time last week, I was reporting saying, hey, Evergrande just got ordered to liquidate its asset, $300 billion property development management bank, ordered to liquidate after 7 tries of trying to pursue solvency. It can't do it, and that has a lot to do with how they report statistics in China. Has a lot to do with just kind of their approach to pseudo-capitalism. But Jerome Powell is taking a look around the world and looking at risks constantly. They're trying to do risk analyses. What is going to be a potential threat to the dollar, a potential threat to the American economy, and a potential threat to jobs, right? And I think this 60 Minutes interview comes at a time very poignantly, right? And so to wrap all this up, you have the 2 highest offices of financial regulation and financial control in the 2 biggest powers on the planet coming out within the same 24-hour span, capturing the public's attention, capturing Wall Street and the investment class attention. And both of them are issuing warnings. One of them is having to halt the markets. The other one is trying to hold the other side of the government accountable, saying, you guys got to stop. You got to stop spending. Stop ordering me to run the printer, right? And these are probably the most ominous words here. And the sooner, better than later, right? Let's look at the chat. Let's see what you guys are thinking about all this. I see Crypto Billy in the chat. Love to see it. Giver's gain for sure. Let's see what you all have to say about this. T-Shroom killing it today. These hot news topics. Yes. Smash the likes. Stop lurking and smash the likes. I love that. I love that. A bit of brevity. A bit of brevity here on an otherwise fairly somber day. Now I'm going to take a moment for the OGs, for the truly dedicated loyalist bros. You'll know, Tim and I on Saturday was it Saturday or Friday, we talked about the last time we cried. And I revealed that the last time I cried was last Monday when I was reporting on the Evergreen story. Now, I didn't cry live, right? But while I was reading about it, kind of researching it before I went live to share it with you all, I shed a tear. And the same thing happened this morning. Because the Chinese people are going to be hurt by this. billions of people, right? It's kind of fun. It's kind of sexy to bring up these charts that are just huge, downfalls. Right, but it's hard. It's going to hurt. We saw it in '08 in the American economy that rippled all around the world. And, hopefully this doesn't ripple around the world, whatever fallout occurs here in China, right? But it likely will. And so it's not just going to be the Chinese people. It's going to be the Indian people, right? It's going to be the Europeans. It's going to be the Australians and probably the Americans as well are going to feel the effects of this, of the world's manufacturing hub in fallout, right? In potentially in free. Now, I'm not calling it free fall yet. I don't think this is a free fall that the Chinese economy is in. It's not. If you look at the chart here, let's look at that Kabesi letter. It has a pretty good zoomed out chart here. If you look at it, it is returning to levels of 2019, but it's not yet at levels, right, at these support levels put in back here in 2012, 2000, right? So it's not like it's in free fall. I would not call this free fall. This is a rather, it's definitely bad, and it is a kind of a result of a Head and Shoulders, but I wouldn't call this a free fall yet. I don't know that even matters though, right? Because it could be imminent. As that happens, it's going to completely wreck the Chinese economy, which makes all of the world's stuff. And so what is that going to do? That's not going to just be able to pass over. It's going to cause high inflation, right? Because if they stop making stuff, if the country that makes all the world's stuff stops making that stuff, there is a lower supply of stuff. Lawn chairs, gaskets, tractors, computers, phones, chairs, all of that stuff, there's going to be less of it being minted, right, to put into crypto terms. And therefore, it causes it all to be more expensive, right? So things can get pretty hairy here, and we're seeing kind of the acceleration of this narrative that we've been seeing so much of, people calling for the downfall of China. We're seeing the acceleration of that, not calling for it to happen, that it should happen, calling for it because they're observing the economy, saying this is scary, pay attention. We're starting to see that those predictions, those observations are actually probably true, and that we're going to live in a time where we're going to see some of that fallout as all this comes, becomes clear. The answer here is pretty obvious. Bitcoin, buy Bitcoin. Bitcoin is a fixed asset, right? Fixed supply asset. It's not, buy gold. I don't know what the future of the American stock market looks like here. I would imagine, just looking at it objectively, I would imagine a pretty heavy rotation into American tech companies, right, that don't rely on manufactured goods would probably be something to buy, right? Google. So anyway, this is kind of my take on this. There's going to be a lot more information coming out. Obviously, the rest of the week of trading for the CSI 3000, which is the Chinese index, is going to be watched like a hawk, and people are going to be buying more Bitcoin, rotating into Bitcoin. If this is going to be the event that kind of pushes Bitcoin higher up to test 50,000, get up above that to test all-time highs, it might be. I kind of get a sense that this won't be that event. I think this is going to be a lot of folks kind of looking around like a Mexican standoff. What should we do next? But I do think that there is going to be a pretty heavy move into quality, which is going to probably be gold and Bitcoin, right? And it's going to be new buyers. It's going to be new money flowing in that probably hasn't been bought Bitcoin ever, and probably hasn't bought gold in several decades, right? So that's kind of what I'm looking at. That's how I see this. But pray for the Chinese people, because this could get bad. I think it already has gotten pretty bad over there. Not very much information, not very much truth makes it out of China about how the real conditions are there. They have a lot of, great cities, very strong, awesome, super impressive cities, right? But then they have just miles and thousands of miles and acres of just extreme poverty still, right? And those people are going to suffer. Human beings just like you and me, that God created, are going to suffer today. Probably not today, but they're going to suffer, right? They have been, and just pray for them, right? I'm not trying to over exaggerate it. What I'm trying to do is motivate you to pray to the God you believe in, that things are going to be okay for these people, that families are not going to be ripped apart, right? That people will be okay to the best that they can be. All right. Well, 3 p.m. we'll be live again. Thank you so much for tuning in, bros. We'll be in the chat in Discord, talking about this. Probably a lot more just kind of as more information unfolds. Thank you so much for tuning in. I've been T. Shroom, and we'll be live 3 p.m. Eastern Standard today to chat about this more, kind of see what best opportunities there are out there. Tim did put out his morning video this morning, so go check that out as well. And we'll see you at 3.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shroom's news got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.